Welcome back. We have saved the best session at the end for you. Today, we're going to talk about the global fintech landscape, and we have very interesting panel here. Unfortunately, we're missing one key participant. She had some last-minute emergencies. Having said so, let me just go through the introductions first, and then we'll start with the key topics of the day. I'll just summarize what has happened throughout the day so that we get the right context. So if you have missed any sessions, please do watch them. They're available on recording. So we started the day today with MAS CTO Swapnindu coming and explaining about the APAC innovation ecosystem and how exactly the regulatory sandboxes and public sandboxes are making the difference, and his views on crypto and the innovation around ESG and the data innovations and regulations around that. Suppose that we did the work, the session for identity, and Earth ID Polygon participated in that. If you are interested in going into depths of identity, that is a very good session. And then followed by that, we had a Web3 session from Heather and Polygon to understand different trends within the Web3. We have a parallel session running here. So there is Earth ID as well as Hedera workshop, which is also going on. They are recorded. So don't worry if you miss them, you can always go back and refer to them. So today's this session is Fintech Global Landscape, and we have 3 speakers today. And let me start with the introductions first. So Abhishant Pant is founder of Fintech Meetup, that is India's biggest Fintech accelerator. It is a Mumbai Fintech accelerator in partnership with 2 other governments and 8 other large corporates. The originator of annual Fintech Market Connect initiative called Fintech Yatra, an epic road journey of around 10,000 kilometers, 50 days, 20 cities, and 500 startups connected. Abhishant is also founder for Yatra Angel Network, an early stage fintech startup investment network founded by and led by angels. We also have Prasanna Loha, director of Blockstack. Prasanna has over 22 years of experience in technology innovation, has led rock-solid software solutions for industry-leading enterprise and with lean and agile teams. He has been top 50 CIO, 50 influencer leaders, and also been top 20 BSR leadership. He's a chair of Blockchain Consortium and co-chair with IAMAI and FICCI. He was part of various deliveries like India's first Aadhaar and biometric-enabled AT and paperless account opening in India's first omnichannel framework for banks. We have Syed Mushir here. Syed is a founder and managing director of Fintech Asia, building Asia's next generation of business. Fintech Asia enables startups, corporates, and policymakers in their innovation journey. Is a consultant at Bank for Innovation Settlements, BIS, Innovation Hub in Hong Kong. Also advisor for Stellar Development Foundation in APAC. Syed is also co-founder of Fintech Association of Hong Kong and the board member and co-chair of Islamic Fintech Global Impact Fintech Forum. With those introductions, we'll now go to the key topics of the day. So I will go to first Abhishant as a speaker here. So Abhishant, it is lovely to have you second time at FIS event. Nice to see you again here. Abhishant has spoken at FIS previous events in India and Philippine level. It was an internal event to FIS. So Abhishant brings a wide experience and journey that he has taken witnessing the literal growth of fintech in India. His journey throughout the India landscape is very popular, and I'm personally a fan of that. So Abhishant, over to you for first the introduction of your ecosystem and the key salient points that you would like to highlight. And then we'll go to the topics which are, you have witnessed firsthand the evolution of fintech in India. And I'd like to understand from you, for our audience, kind of an overview about everything that I know it's a very broad question, and we had discussion about that sometime back as well. But if you can condense that into key highlights, and then we can go around the table. And if you can focus more on payments, and then we have Prasanna Lohar focusing on the banking side of it, and then Syed here will be focusing more on the APAC side of it and the Hong Kong ecosystem as such. So over to you, Bishant, for first the broad introduction and ecosystem that you have and your journey. And we truly want to get the condensed and something which is enriched version that I think in last conversation you spoke about, and it was very interesting. And if you can start with that, that would be great.
Thanks, Prashant, and good to see my friends from different parts of India and the world, Mushir and Prasanna. So thanks a lot to all of you. We run this small ecosystem called the Fintech Meetup. It's essentially an ecosystem which is engaging part of a startup journey from the day it is an idea to the time it becomes an IPO worthy value chain. So that's the journey that we undertake with the organization. I won't bore the audience with that. Specifically now coming to the topic, which is giving a condensed view of potentially how the fintech landscape evolved in India. I'll try to be as precise as possible. To me, the kind of first set of journey from a India domain point of view somewhere possibly would have started in 80s, when actually the customers out here in India got first taste of a transaction product, which essentially happened via the card launch, which is the first credit card in India. There are various claims to it. Somebody said it happened in 84, somebody said in 86. But the first credit card which came in India somewhere in 80s, early 80s, was possibly first product which essentially took banking outside the bank as such, wherein the consumer could use it for transactional purpose. The second piece of it happened when essentially the ATMs came into existence in India. That was in 1987 when HSBC launched the first ATM of India, which was in Kolkata. So the movement happened from consumer transaction journey to essentially access to cash outside the ATM. So therefore, these were the momentous changes, at least in my mind. The third set of changes happened when in 1994, the first banking license came in. The first private bank to get the license, new age private bank to get the license, was IndusInd. After that, essentially the next change happened in early 2000 when core banking started. And with that, essentially the first set of fintechs in India, which were at that point of time, the internet companies started. And the first, at least in my mind, the first fintech of India was a company which started in 1999, shut down in 2004, was a company called apnaloan.com. It started as a loan aggregator, which was essentially nothing but a loan marketplace originated out of Andromeda, which was the largest DSA of city and of course the largest DSA at that point of time in India. So that's how essentially the first seeds were sown in India. And then 2006, another entity started again, this time on the loan aggregation part of it, a company called Deal for Loans, which was kind of a refined avatar of apnaloan.com. Deal for Loans exists even today. It is known as Wishfin now. Then came the payments part of it. Sometime in 2006-7, those of you who have been following payments for quite some time would remember the It's Cash advertisements, which came in late 2000s, 2007 to be precise, when it came as a medium using which you can book your railway tickets. And it was seriously an interesting piece, because railway ticket booking was the first use case which was identified in India, and not even recharges. Recharges came quite late. Railway ticket booking was the first use case in India from a payments point of view. It's Cash essentially made it possible, made it important, made it interesting. After that is when you essentially went to the next stage, wherein the wallets came into picture. And then is when the 33rd license holder of the payments wallet, which is prepaid account holder, Paytm came into existence, and Paytm and MobiKwik started building the payments rail from an India market point of view. It was in the similar time frame, interestingly, when Paytm and MobiKwik were building things on the consumer side of the story, 2012 somewhere. It was at the same point of time when M-Pesa started in India, which was essentially powering access to wallets using mobile phone as the method of doing that, rather than physical card as an instrument. At the same point of time, 2013 odd or so, started a company called HappPay, which was on the business side of the payments. So interestingly, while today we think of it as something which would have started day before, but actually all of these entities were decade old. 2012-13 was the kind of, I would call it as the key period in Indian market when consumer payments, mobile payments, business payments, all of this happened. Sometime in between, of course, it was kind of a failed attempt, but I would still mention it, 2006-7, when the combination of Airtel, Citibank, and others started a banking wallet proposition back in 2006, which was launched in Bangalore, but flopped over the period of time, did not work. And the people who were the founders of that organization eventually ended up creating in 2009 a company called EasyTap, which essentially became the first acceptance device at a Square level or a Square equivalent in Indian market, which, as you all know, eventually got sold for 150 million a few days back to Razorpay. In fact, I was I was the first salesman of EasyTap, when in 2012, we sold the first EasyTap device for commercial use to Reliance General Insurance. So I and Bobby, who is the current CEO of WhatsApp India, we went and sold the first set of devices. So 2012 was a very interesting period. You got an acceptance device, a new kind of acceptance device. You got B2B consumer payment instruments. You got consumer payments as such. And then you had wallets and everything, which happened as such. So that's essentially start of payments in India, which eventually over the period of time moved into the UPI side of the story. It then moved into from there to payments infrastructure side of the story and multiple layers to that. I can possibly speak for that for more than an hour, but that's for more of history buffs, and otherwise it will become a monologue. So I'll stop at this point of time. Last time when I spoke like this, Prasanna's session was cut by almost 40 minutes. So I'll stop myself at this point and over to you, Prashant. I'll pick that point up at the later stage. Yeah.
Sorry. Yeah. So about your journey in the banking area, if you can get kind of a quick summary of that, the way Abhishan tried to do, that would be great. And then we'll go around the table again in more deeper on some of the specific areas. So over to you, Prasanna. Prasanna, you're on mute. Prasanna, you there? Okay. Probably we'll come back to Prasanna. Maybe there is some technical issue there. So I'll shift to Mushir. And Mushir, the way Abhishan tried to condense his journey, if you can try to do the same attempt with Fintech Asia and how exactly the overall ecosystem that you have evolved over time, and as a witness to the history, how things changed so far.
Thanks, Prashant. It's going to be very hard to top anything Abhishan puts forward. His journey has been fantastic, and we all look at him as an ideal. So, in terms of my journey in fintech, it started post my moving to Hong Kong. I used to be a trader in Futures First in India and Mauritius, also leading the firm there in Mauritius. But when I came to Hong Kong, I started exploring technology and its impact on capital markets. I was working for a consulting firm who just focused on that. And that's where I got an exposure to blockchain for the first time, looking at a report that the firm had released on how blockchain can be used in capital market use cases. Now, subsequently, while being there, I started getting actively involved in the fintech ecosystem in Hong Kong. This is circa 2015, 2016, when it was still maturing. I mean, I would say the industry, there were probably about 100 to 150 fintechs in Hong Kong at that stage. There wasn't a Hong Kong Fintech Week either. There wasn't an association either. But the key theme that was emerging is how technology is disrupting the ecosystem, in particular, where you see the movement from cash to digital, right? We've seen Abhishan's journey when he did multiple journeys in terms of using only digital, not just in India, but across Southeast Asia a few years back. But in Hong Kong, it was a unique problem because Hong Kong is a highly developed market in the sense it's got $50,000 per capita income, one of the highest penetrations of banks or ATMs. There are about 168 banks in Hong Kong for a population of 7.2 million people. And on the other hand, you also have an high propensity of credit cards. Most professionals in Hong Kong, or most of the population may be holding 2 to 3 credit cards. So you already had all of these different needs that people were very used to, and digital wasn't really popular. So on one hand, on the retail side, you had this issue, and on the other side, from a B2B perspective, banks were highly profitable. It is still one of the highest profit earning places for any bank for most of the banks who are based here across their business lines. And you can see that the move to digital was not really as much of in demand as in, say, some other places where you're seeing deep profit taking place, like it was happening in mainland China, being driven by big tech. So what we saw was a very slow movement. Quite a few people were very dismissive in the corporates of what fintech could do, believing that it won't have much impact. We moved from that in 2017, 2018 to a lot of people believing that this was disruptive, may end the banks in some senses. But I think in the 2018 to 2020 kind of frame, you now have that realization where people started moving towards this collaboration, cooperation model, where everybody now realized that fintech on its own is not going to be as disruptive or impactful in a market like Hong Kong, with a small population, a very highly B2B market, because regulations play a big role. So fintechs have to, abide by it or help companies, the financial institutions reach that. While on the other hand, you also realize that banks have their own legacy systems, they have their own problems, and then for them to suddenly become digital enterprises or pushed digital is going to be quite challenging. So we found that marriage, and you've seen the growth in the region where we now have 600 plus in Hong Kong, in particular, 600 plus fintech companies spread across B2B and B2C. One big enabler for this, as to a certain extent has been also in the case in India with RBI, was the work that the HKMA has been doing, which is the Hong Kong Monetary Authority and the de facto central bank, right? So in 2017, they came up with this concept of 7 key initiatives towards smart banking. And that involved elements of, launching e-wallets, launching a program for virtual banks, one of the first in the region. They launched 8 licenses for that. Then they launched a few other things to support this, including a sandbox. And HKM has been very progressive, and you've seen that follow up with SFC and the other authority in terms of the insurance authority following a similar path. But HKM really took that stride. And now you're seeing the next phase where we're talking about what they call all banks go fintech. So that's the goal for 2025. And the aim is to see banks actively deploy technology and look at fintech, as well as look at talent, look at CBDC and everything else. When they launched the virtual bank license, that was kind of a wake-up moment for many banks, because you either had to try to work with technology firms to apply for the license, or you had to up your game, right? And that's what we saw make a big change. You saw things like small things maybe, but you saw zero balance or low balance fees that the banks used to apply went away. You then started seeing them actively trying to work with fintechs to adopt them and to up their systems and their delivery. The mobile apps, as it were, of the banks started, becoming much better, not as cumbersome as before. Some of them still are very cumbersome, but in general, you saw that movement happening where now everybody, I remember this phase, as to say, right, when in 2017, 2018, if you're saying fintech, it used to be like you meet one person in the bank who was a figurehead, didn't do much. It was just like, oh, let's meet fintechs, because try to show that you're being positive, but nothing was happening internally if you put in money. But now there's actually a huge team, there are large digital teams, they're actively working with fintechs, and that has changed and is further positive. And we're seeing this change across B2B markets, like developed markets like Hong Kong. Singapore and Hong Kong have always been step to close by from a step-to-step perspective in the B2B market, and we're seeing that spread to some of the other markets. So I'll take a pause here, but happy to come back to this conversation as we proceed through the chat. Okay.
Thanks, Mushir, for the wonderful journey. Prasanna, I hope you're there now. And
yeah, I'm there. Yeah, there is some. I'm in transit, so I might keep the camera off for some time while I'm talking.
Sure, Prasanna, no problem. Yeah. So,
Yeah.
Prasanna, the question is the overall journey that you had in your banking area. If you can kind of distill it, summarize it from the time or historical perspective, how the key trends have changed and how things are right now, that would be great. And then we will come to the future aspect and come to the innovation areas. But Based on your experience, if you can distill that part, that would be great.
Yeah, I think I've been hearing our friend Abhishant and Mushir. So I think banking have changed over a period of the last 25 years. Prior to that, I think Abhishant spoken about how was the traditional banking, the branch model. That was the only phase for any of the bank, like branch model, which is a traditional banking. Eventually, we landed in a era of core banking systems or IT, information technology came into the branches. So that was an era people used to raise why PCs are coming to the branches. And eventually we have seen the time required to serve any of the banking services was into days together. For example, opening a bank account, it was typically the matter of 30-35 days. And now look at a lot of privatization of banks early 2000, and there were some guidelines around internet banking and mobile banking of RBI. From there on, we have seen different type of banking. Typically, we may say it's internet era banking, and down the line, 2016 onwards, or since we have seen NFS system or through NPCI, we have seen many other path-breaking products like IMPS, or we talk about APS and so on. So I think considering that these aspects, we have seen this new type of banking has started with the NPCI that has given an attraction competition to other players like Mastercard, Visa, and we have seen lot of new payment companies have arisen from a payment gateway based builders or buildation. From there on, we have seen lot of a third party service provider like Venture Infotech or FineLab, Looters, Prism, and we have seen FSS, FIS, and since then many fintechs have started embarking on some of those specialized journeys, either only for card or either only for a debit card or credit card or a typical open banking kind of ecosystem. I think I would summarize by saying that what we have seen traditional banking has rised up to the digital banking, which typically we see in form of a mobile banking or some of those apps like Google Pay, Phone Pay, right? I think here onwards journey will be something like what we have seen rise of internet early 2000. We'll see rise of lot of emerging banking with the emerging technologies. Like how can we have a bi-directional banking with the AI? Like somebody is doing transaction and give back a notification based upon the transaction type or transaction done by which persona, transaction done at what time. Are there any other facilities or something kind of a cross sell can happen? So that kind of a bi-directional banking will come on top of current data, which is built on big data or AI kind of stuff. So this way we treat it as the intelligent banking will come. And I think future will be difficult to predict. Rather, we can predict some of those use cases with metaverse or some kind of a wearable IoT kind of a banking when 5G will come into reality. So I think this is how banking have moved on. Banking has moved from one channel to the multi-channel to the omni-channel to now metaverse or banking everywhere kind of a or banking everyday kind of a models are coming. So I think banking is going to be a marketplace here onwards. We have seen a lot of business models are coming in, but with the collaboration ecosystem like blockchain, there are few business models coming outside of India, in India also. How can we do a lending against asset or lending against alternate data or any other financial instrument? So I think it's going to be a very beautiful time here onwards. Open banking, API banking will always fuel these kind of innovations. Yeah, yeah. I stop here and will further continue.
Thanks, Prasanna. So with this history and context, right, I'll start with the building the layers and let's start with the regulations as such, and then we go to the layers above that. So for anything that has to be built into fintech, which is enterprise fintech specifically, you all need to also understand the regulatory fabric either in India, internationally, or how regulators are collaborating with each other. So I'll start with Abhishant here. Abhishant, in the enterprise fintech area, what are the key challenges that you have seen where you see either enablement, which is promoting the fintechs, or some kind of a blocking areas where it is getting difficult, and what are the approaches like sandboxes where you're doing the experimentation in the sandbox first, getting the acceptance overall, and then trying to see how policymakers and regulators are reacting to it. So there are various mechanisms where we have various countries working on those areas, specifically into newer areas like ESG and maybe in crypto. Obviously, there's no sandbox for crypto as of now, but if there was, right, that would be a great thing. So what's your view about the regulatory landscape in India and in other countries, how it is promoting the fintech, and what are the key enablement areas which help the fintech to grow, and what are the key hurdles as well?
Thanks, Prashant, and kind of possibly I'll look at what best of what Mushir and Krishna said. I'll try to possibly put some of them together. So fortunately or unfortunately, from a regulation point of view, our regulator has this unfortunate, I'll call it this as an unfortunate job of managing Africa, Europe, and Hong Kong at the same point of time. Why I say that? Because of the fundamental reason that in our country's context, we have an Africa, which means that we have a large swaths of population which has bare minimum availability of resources and availability of instruments to pay or to transact, and there are institutions serving them. Then we have a Europe in our own self, which is essentially a population anywhere close to 200 odd million odd or so, which essentially is equivalent of that from a digital nativeness point of view. And then further smaller population, which can be from a digital awareness and appreciation point of view, can be termed as an equivalent of a HK or a Singapore or so. So in that sense, I will put it this way, that our regulator has this unfortunate job of creating regulation, which essentially annoys the digital native of HK and Singapore, finds a level of appreciation with the European population, and essentially has no significance for African population. So unfortunately, that they don't have a choice. They are supposed to make regulations which will fit everyone. Now, therefore, where does it end up to? It essentially ends up to a situation wherein our adoption curve, if you look at as a country, our adoption curve cannot be termed as an equivalent to any of these markets. While we have large number of transactions happening in our platform and our value chains, there is no equivalent of it at a consolidated level in terms of percentage of population who has adopted solutions. There is no equivalent in each of these markets. We have much longer journey to cover. But then when you look at them in isolation in terms of these three islands, you will realize that where do we stand? And as a result of that, we are making laws which essentially, the moment it hits the point of basic critical appreciation among the HK and Singapore population, we start essentially creating punitive regulations which starts hampering its growth to the next level. हमारे लिए problem ये है कि we essentially start taking this audience as the benchmark for everything else which needs to follow. And that's where essentially we start getting into a wrong precedent of establishing solutions and establishing the long-term value chain for that. But unfortunately, the problem is that the evolution curve in our environment is so difficult that I frankly can have only my sympathy towards the regulator, that how many pieces they need to manage. The Twitterati or the Twitter population will never be happy with them, and those who are beyond Facebook will never be able to understand and will never get impacted because of that. Like, say, for example, the prepaid screw up which the regulator has created, and I'm being blunt and open because I don't care, because regulator at least cannot regulate me, so I don't care as such. So the screw up regulator has created today from the point of view of the prepaid piece has frankly no implication of your Africa population. It has no implication of them, because in any case, nobody was giving them a loan at a click of a button, and they were never worthy in that sense. So that audience is something which is out of that picture. The audience which was essentially kind of using and getting benefited out of it was at the intersection of HK, Singapore, and Europe. And that audience, essentially, if they fail in getting an appreciation of right kind of regulations and how to address themselves, then boss, they were literate enough to understand, and therefore you cannot kind of keep on fighting for every single audience out there. Because if they know how to essentially manage their digital paradigm, they also very well were aware of when they were opting for things. So therefore, at least in my mind, it's a difficult task. Purely coming to the enterprise side of the story and purely coming on that part of the value chain, from a payments standpoint, there were multiple solutions which came over the period of time. The most successful ones were essentially prepaid on top, banking as a service, open infrastructure, open API creations, and so on and so forth. And all of these solutions were essentially giving the banks and the overall value chain a face up at a much faster pace than what the banks and others would have adopted on their own. An institution, say, I'm just taking name for the sake of it, say an institution like Tamil Nadu Mercantile Bank might not have undertaken a full stack journey from a digitization point of view in payments infrastructure if there was no middle layer between that. Because the cost of doing operations is so pathetically huge that they would have never opted for that. So many of these banks and financial institutions have not been able to issue credit cards for the longest time because they don't understand that business. They don't understand the nuances of technology. They don't understand the nuances of underwriting, risk, and everything else. So there is and there will be a need of that middle layer from that infrastructure point of view. And this middle layer, this infrastructure layer is something which was catalyzing that journey. At least at this point of time, there are multiple detrimental impacts on them. I think there will be a middle path which will emerge out of this, largely from a credit as an infrastructure point of view. It will be a credit card bin, or it will be essentially NBFC plus credit card, or it will essentially be strategic TSP tie-ups with the bank and things of that nature. But will it essentially lead to the similar kind of growth and other pieces from an enterprise solutioning point of view? I think it will essentially have some level of detrimency in it for a certain period of time, till the time there is a next level growth which happens in this entire value chain. I'll close my piece with an example. Some days back, which was essentially around a month back, I met with somebody who is a second line of leadership with the regulator. We were in an environment outside of our country, and in that environment, his son is studying at IIT Kharagpur, and he said, "Yeah, Abhishant, you are saying," and I was very vocal, just the way I am vocal at this point of time. He said, "Abhishant, you are telling this to me. You know what my son says when we discuss about crypto and NFT and other things? He says, Papa, aapko kuch nahi pata hai." And I agree with him. It's just that when I come back to the country, I cannot essentially say that. I need to still manage the regulations within the boundaries which satisfy the Africa, Europe, and HK in Singapore.
Thanks, Abhishant. Wonderful analogy and the difficulty and the complexity of regulations in India. Now, I'd like to switch to Prasanna about what is the areas where you see this difficult mesh getting navigated from the banks, and how they are cooperating and then competing at the same time with each other. Plus, the fintechs earlier, they were not kind of a gel, but now there is something which is more seamless interaction, or at least hopefully seamless interaction between banks and fintechs. So what's your view on that, Prasanna, about how interbank collaboration is happening and how they are navigating through this mesh, and then the role of fintechs into those areas, and how they are helping in the RegTech area? Over to you, Prasanna.
I think a very good question, and every bank has its own journey to adopt fintech, or to adopt a digital transformation or digital awareness within within a bank, right? And in the Indian context, there are varieties of banks. We have private sector banks, within private sector, smaller or larger banks. We have a public sector banks, and we have uh, some challenging kind of banks also, like Yes Bank or SMB or IndusInd. We have cooperative banks. We have small finance banks, payments bank. So now every bank type has its own journey to provide a banking services to their customers, or to operate banking within a bank, right? Some of them have too much of operations and they are sitting on a huge opportunity to automate. Some of them are on digital first journeys like payment bank. They can always have a digital first kind of a product roadmap for any of their internal or external customers. Coming back, what we have seen largely early 2000 till 2007, it was always a traditional banking for most of the banks, except some of those 5-7 banks who come up with the internet banking followed by mobile banking. And largely, what regulators brought in some of those entities like NPCI or Rebit or IDRBT has given lot of attraction for these banks to really come up with some better digital curve. And now today, if you see, most of the banks have some attention or concentration toward digital transformation. Still, there is a lot of a gap out there. Pandemic must have given a push for a digital transformation, but eventually, while we are after 1 year or so of a post-pandemic, we are still to do lot many things. I think during these last 6 to 7 years, fintech has taken this opportunity to create a different level of customer experience, which typically banks doesn't give. Some of the banks have a good applications to provide to the customer services, but eventually, if you look at a better customer experience and concentrated some of those customer services either for payments or digital lending or co-lending these days, or insurance, fintechs have done a very good job for our Indian base of customers. Payments, I think typically most of the services are with most of the fintech companies, followed by digital lending. Let's see how banks can really ride on these for next couple of years and so on. So I think internally, pandemic or these similar kind of opportunity to really transformation with the right set of top management has given lot. Now private sector banks also, say locally SBI or Bank of Baroda are really doing a better job compared to what they were doing 6 to 7 years before. Example, Yono is one of those example, or Bank of Baroda is come up with the BOB World. Or similarly, I think I could see that other PSU banks also will launch some kind of super apps for their customers, as well as something for onboarding a new customers. I think same thing. The new age banks, small finance banks are doing. India Stack is a very good story with Aadhaar and UPI and e-sign or eKYC, or we talk about AEPS, ABPS, and eventually account aggregator. So I think apart from these 8-9 banks who has adopted almost all stacks, so I think there is a larger digital transformation need is there with many of the banks for lending or account opening, either for both savings account or a current account or payment forms. I think if you look at internal culture now or internal collaboration, the various banks are onboarding specialized roles. Like I think AI officer was not existing anywhere in the bank. Like the banks like Yes Bank has started that kind of stuff, or having a special unit on big data or AI or RPA, or building some COEs. I have seen a blockchain officer in a bank, right? So that's great to see one of those top 5 private sector bank coming up this kind of roles. And eventually banks are now, while creating these new roles like innovation officers or chief digital officers, in some of those top 10 banks, these roles are prominently available, and these roles are really giving a justice to the banking business, right? I think what is happening now, apart from having internal culture, apart from creating those stacks for to support this culture to bring a right digital transformation, externally now there are some forums or communities or regulatory companies like RBI Innovation Hub, or you talk about how IFSC is bringing on those courts, or even RBI at their fintech unit has come up with a Harbinger hackathon or some of them. So that is bringing these fintechs and banks together in a right direction, where right direction could be right security, right compliance, right way of creating any of those products. So I think apart from internal collaboration, internal culture, now banks have started collaborating to build interbank use cases. It could be a interbank decentralized KYC, or it could be for reporting a fraud, or it could be a LCBG kind of a use case for a or interbank, how they can do a syndicated lending or use those same amount of AML KYC data. So I think that gives a traction, at least at a regulator end, they are ready for a futuristic banking with a smaller experiments or smaller POCs and a pilot. Eventually, RBI Innovation has announced some of them successful experiments on interoperability of blockchains or some LCBC use case and so on. So and what more is happening, some of those tech heavy, digital heavy banks come up with some kind of experiment, and that experiment becomes something for other banks to follow. Example, metaverse, we have seen with the Union Bank in a couple of months back, and eventually you will see at least 6 banks I know who are going to launch something on metaverse down the line 3 months. So peer banking pressure or peer banking learning is also huge stuff to look at it. So ultimately, I think gain is for customer. Even if early days we used to say that fintechs are competition, but it was never true. The truth is that fintechs are really needed for Indian context, because we have a larger opportunity to do financial inclusion or better financial services, and fintech has really given a that experience that you can do payments anywhere, you can open account anywhere, or you can do lending 24/7 or anywhere, either on e-commerce or either on any of those physical infrastructure where Bajaj Finserv or Tata Capitals are present out there. So it's a beautiful time for us to really see how largely we can create some platform so that this fintech bank collaboration can happen within few days. So typically these days, the way every bank has its own architecture and the way of onboarding fintech, it takes some time. But I think with some platforms like UP has it made easy, at least for payment side. Maybe account aggregator, it will make it easy for some of those SME lending or lending use cases. We need to see how further more this banking as services platform will come in between and provide immediate onboarding of fintechs for a better services for the customer eventually 24/7 and across varieties of the financial instruments. I think it's a good time and good to see that RBI regulators are pushing banks also to go for fintech opportunities, go for co-lending and so on. I think for a service provider end, they are also now coming up with a good platform, data platforms or AI platforms or conversation platform which can plug and play with any of those existing architecture. But to mitigate that, we need to do internal reskilling at an infra or IT or at a business, which typically most of the banks have to really look at that side. I think some of those fintech masterclass or some of those digital workshops which is happening at IDRBT or NIBM, or I think Vishant was driving some of them early since 2017-18. And then furthermore, I think we need to push in a better structured way from a regulator side, from a banking side. Then I think we can see it has to be. It should not be a point-to-point efforts to onboard fintechs, but it should be a structured or organized efforts to onboard fintechs, not only with one bank with the many banks. Yeah. So that larger, most of the customers who are not still on the financial services side get well. Yeah. Thanks.
Thanks, Prasanna. So, Mushir, what's your view about how regulators, policymakers, financial institutes, fintechs, and the core banking platforms in Southeast Asia, that this Prasanna and Abhishan talked about India as a landscape, but is it different in Southeast Asia? And your vantage point, how is your experience being? How fintechs are collaborating with banks? What opportunities are there, and how they are navigating through the regulatory kind of a maze, and to what level the enablement frameworks or these sandboxes or initiatives from regulators are helping both financial institutions, fintechs to collaborate more on. And again, there is something which is core, the existing legacy and core banking applications that we have in the bank, and how they are reacting to it, because in some cases, the bank felt they were competition to fintech, and then again, fintech felt the competition to core banking applications. And there is a lot of things that changed recently, where now it's more kind of a cooperation rather than competition. So what's your view, Mushir, on that from Southeast Asia view perspective?
Thanks. I like the analogy that Abhishant kind of gave in terms of Africa and Hong Kong and different elements when it came to the Indian landscape. And I feel that's one of the things that also happens with Asia as a continent, right? Because there are multiple different levels of development, both from an economic perspective and fintech perspective when it comes to the region, right? Now, let's just take, for the sake of Southeast Asia and just including Hong Kong and China into that equation, you're looking at actually three different ecosystems. And I'll do the comparison. One being China as this large economy, similar to India, but probably in the initial stages ahead when it came to fintech adoption and seamlessness and connectivity, etc. They are a $10 trillion economy. India is a $2 trillion economy. So there's those differences. Then there's the Hong Kong and Singapore, which are very much on a similar level as both on the retail and on the B2B side. Key differences here is, one, regulatory play has been different in these three kind of segments, right? Number one, when we look at mainland China, there quite often the regulators initially, especially between 2005 to say 2019, went with this approach of let's let the ecosystem grow, right? Till it becomes systematically important or risky, we will allow them to grow because this is not fundamentally impacting the financial system, right? Because even if you look at digital lending, China had this massive peer-to-peer lending spike and then fall in between 2010 to 2017. Even then, the size of the P2P lending, it was the largest in the world, but it was only like 2% of the overall market, right? Banking market. But the regulators allowed that to go. The same happened with Alipay, same happened with payment processes, where you build a system, it's for the common good, the private enterprises are doing it, so the government allowed it. However, in the last 3 years, what you've seen is now the regulators have come in strongly with both on the regulatory front, bringing in new regulations that tighten what a technology firm or a fintech can or cannot do, and it's much more stringent, bringing them almost in par with regulatory impact for that financial institutions face, while on the other hand, also having action specifically against monopoly, right? Opening up data or opening up, not opening up data, sorry, opening. So you had Alipay ecosystem and you had a Tencent ecosystem, which would almost function independently in silos because you couldn't do interoperability, and you had an Alipay or an Ant Financial portfolio and you had a Tencent portfolio, but there's a lot of difficulties interacting between the two, but that has been broken because of new regulations, right? So that's on one side. But it was useful because it allowed about 1 billion people in mainland China to have access to mobile technology for financial services across the sphere, right? And it became very popular, and it's something that has been replicated in many countries, especially when it came to QR code, and secondly, when it came to the concept of super app, which almost any major fintech wants to replicate, right? Be it the Paytms of the world or Grabs or Gojeks, that's all a replication of what WeChat did and was followed by Ant. Second stage is the mature markets of Hong Kong and Singapore. Here, it has been the case where the regulators have been very, forthcoming. Both the MAS and HKMA probably are the leaders in some sense in the last 7 years in totality when it comes to adoption of digital, right? Like proactively coming up with regulations, proactively engaging with markets, having sandboxes. They were among the first in Asia to have sandboxes across different verticals and encouraging innovation, right? And actually challenging the banks to do more from an innovation and digital perspective, rather than allowing them to go at their own pace, right? What happened with NPCI, as Prashant mentioned, was this impact. It was a secondary impact on all the banks because they saw what fintechs could do, right? Whereas in Hong Kong and Singapore, the regulators were very upfront and clear that they wanted to push the incumbents to do more and also to encourage fintech innovation. So that has been a different layer, but also very largely focused on B2B and enabling that, right? So newer regulations being brought in very quickly was very important. And we've seen RBI try to do the same to a large extent. Then comes the emerging markets from Indonesia to Vietnam and Thailand, etc., who are all very large population-based markets, but they are transforming from being very underbanked. So Hong Kong, Singapore are highly banked. Mainland China is very decently, good penetration comes to banking services, at least basic banking services. Whereas in places like Philippines and some other parts of ASEAN, or even Indonesia for that matter, a few years ago, you probably had about 30% of the population banked. Now you're talking about 50% of the population being banked. While on the other side, about 75 to 80 to 90%, depending on the country, are all on internet, right? They have access to internet, they're on social media, they're among the most highest users of Facebook and YouTube. So you have had the regulators kind of looking at other regulators, both from India, China perspective, but also Hong Kong, Singapore, to kind of take cues on how they can evolve, right? And that's been the same element with the banking ecosystems. Most of these markets do not have a very wide or deep banking ecosystem. They probably will have 4 to 6 major banks, and then the rest are small banks. And so you would have to have literally not only build fintech ecosystem and infrastructure, but you also have to build the financial services ecosystem and infrastructure. So in many cases, you are seeing banks and fintechs collaborate there because they know like certain fintechs will not be able to reach. Like Indonesia's got thousands of islands, right? So physically for fintechs to reach is going to be challenging. So some of the banks who already have presence there are partnering. Remittance is a major play, like with India being the largest remittance market in Southeast Asia, in Philippines, in Indonesia. You see a massive income that comes in almost up to 10% of the GDP, which is from remittance, right? So being able to get that last mile adoption is a combination of using current incumbent infrastructure combined with fintech technology. So that's been one partnership. Regulators, as I've said, have had to balance this out, right? You have to know that a lot of times we feel, and I'm saying this in the defense of regulators, largely because they get a lot of flack, a lot of criticism, quite often saying, why aren't they moving in first, or we will be left behind, etc., etc. Technology is changing rapidly. Yes, those of us who are here, all of us have experienced that change. And quite a few of us, and at least me personally, I struggle to keep up with the updates in technology that we are seeing across financial services, right? And fintech, crypto, everything else. A lot of regulators tend to come from either economics or banking backgrounds or from law backgrounds, right? Because that's where regulations come in from. The pace of change in these industries have been much lower, right? And they're not exposed on a day-to-day basis to all the changes that technology is bringing in. So we have to be very aware and give them that breathing space. And as an ecosystem, and that's what we did with the Fintech Association of Hong Kong. That's what we do with GIFT. And in my role as FinStep, we've been doing that and working with regulators to first, you need to educate them. And I'm not saying educate in terms of teaching them things, but informing them of what's happening, right? Second, you need to engage with them. This is the 3E environment that I talk about. So engaging, and second is first educating, second is engaging, because they need to know what the industry is looking for. Fintechs and startups will always want the moon, right? But you can't get to the moon. Can you build a satellite, right? That's the analogy I tried to build. So, so that they know what the risks are. And that's where sandboxes that Hong Kong, Singapore started with, and then has been followed with some of the other ecosystems, were very useful, and I highly encourage any emerging markets to use that sandbox approach, which helps them figure out where the technology is, what impacts there are, and then to essentially then license. And the third is enablement, right? When they're looking to enable any new regulations that comes in, it takes a while. There's a bit of engagement. There are certain things, they need to do a consultation. And that's one of the elements that was very important in the ecosystem that I've seen work, is that engagement in terms of saying, okay, we're trying this out, this is happening, feedback, revise, right? Not constantly just leaving it, because a lot of banking regulations, if you see, have not been touched for many years. Outside of whatever Basel has been trying to implement, they haven't changed significantly. There'll be small tweaks here and there, maybe capital ratios, maybe risk metrics, but other than that, nothing major. But with technology, you're now talking about a completely new ecosystem. You're talking about completely new business models and very different ways of doing things, which wasn't changed, right? Like a paper KYC has always been there for ages, right? Decades. Suddenly to do digital KYC is a new concept, right? The risks are different. The processes are different. The people are different. So that's going to be very important. So last point on this is, when you keep this, so having that patience with regulators is very important. Engaging with them is very, very important so that they can move as well. But we have to have patience, because disruption can only last for a small time. You need innovation to last. And for innovation to grow, regulatory support is very, very important. Doesn't mean that the regulators should be allowed to just sit back and let things just progress without acting upon it. For example, and this is without any criticism, but say we look at digital assets in India, we have RBI who are quite vocally very much find it very skeptical about crypto and are talking about how they find the high risk there are. On the other side, we've had the government speak about a new crypto bill, bring in crypto taxation, etc. But over the last 3 years, since that Supreme Court order to allow banks to facilitate banking to crypto firms, we haven't seen any regulations come in. Whereas the rest of the world, all the major economies, be it either banning it like China has done completely, or facilitating it for professionals only, which is what Hong Kong is moving towards, or allowing it for retail with certain dynamics, which is what UK, US, and a few other countries have done, have come out with those regulations and guidelines. So we do need our regulators to act upon it. They've been really good in general with fintech and with payments. But in India, I think with crypto and digital assets, there is a need to just say, hey, this is where we stand. This is the regulations. Now you proceed. Because uncertainty is the biggest killer, not only for the companies, but also for the retail participants, because they don't know what to rely on. What can they do? What cannot do? So it becomes, you're stuck in the middle because it's not illegal, but it's not regulated either. So how do you deal with it? So I'll close with that for now. Thank you.
So one more area that, Michelle, I wanted to get some insights from you is this inter-regulatory collaborations. So to what extent do you see the regulators are open for collaboration, and is there any specific areas that you see which are emerging, like trade finance or other areas where, and how open they are in those areas, and how it is helping overall the APAC fintech landscape?
No, so I would say, look, it's a great question in terms of what collaboration you're seeing, right? So I'll give examples of 3 major collaborations that regulators are doing, right? One is the sandbox example. I think that's clear. That is beneficial for a lot of reasons and has been extremely helpful in places like Hong Kong, where HKMA has done over 100 projects through the sandbox, right? Including for eKYC 3-4 years ago. Second is the global fintech innovation node or network, which is set up by the FCA, where a bunch of about now, I think about 40 regulators globally come together with challenges, and you then have companies like RegTech companies or others trying to solve that. And what helps there is once these fintechs are solving it across these multiple regulators are participating, then their entry into these markets becomes comparatively easier, right? Because they are engaging already with regulators, but also gives the exposure to the regulators on how they can engage. And number 3 is the role I play in terms of I consult to the Bank of International Settlements, the BIS, their innovation hub in Hong Kong. Now, the BIS Innovation Hub started about 3 years ago, 7 different locations, including Hong Kong, Singapore, London, Europe, as well as in North America. The key elements with this is here you have central banks collaborating or working with technology providers on different use cases, but also it could be individual central banks or multiple central banks coming together on use cases. Like we are working on use cases on green finance. We are working on use cases on payments and CBDC and SME finance. So I think these 3 are very important engagement models where we are seeing actively and successfully. In terms of trends where regulators are quite focused on, I think it's very regionally dependent and they're different that they're looking. But one overarching theme is payments is never going to die. I always keep being fascinated with the number of new payment companies that keep coming up and newer ways of doing payments. As long as you have a 7% spread between when you're sending any transfers bank to bank, this payment innovation is going to continue. And that's one major focus, be it CBDCs or traditional payment rails or UPI, whatever. So I think payments is one. Number 2 is, as you rightly said, sustainability and green finance is a major focus. ESG ratings, looking at tokenization of green bonds, which the BIS did with Project Genesis, and a bunch of others that are happening. And number 3 is trade finance and SME finance. SME finance, there are over $2 trillion annual gap for SME funding globally, especially in emerging markets. It's about $1 trillion of that gap. And I think that has to be solved through technology because there's a lot of paper, there's a lot of processes, and that's ripe for disruption. Hasn't really been successful so far by multiple parties because of the complexities. And I hope that can be solved in the next 3 years as a major focus. Thank you.
Thanks, Mushir. So Abhishan, back to you. I know that officially we have exhausted time, but I deliberately kept it as the last session of the day. So we'll continue working on those areas. Abhishan, you're around? Okay, probably Abhishan dropped out. So the next question was about how do we see the future with the emerging tech, the crypto, the metaverse, the DeFi, GameFi, and which are the things that excite you personally, which you look forward for, and to what extent this will become kind of a more absorbed. Right now, the gaming and let's say GameFi or play to earn, this is becoming more reality. But others, we have DAO, we have DeFi's, we have the D apps and other things which still are waiting for mainstream adoption. And the innovations is great. There's a lot of funding that is going around in it. But in your personal opinion, what do you think is getting more traction, and how exactly this space is going to evolve, specifically creator economy and something which is going from centralized to decentralized things, and essentially has a potential to disrupt what we traditionally or TradFi fabric it is, and how exactly that is going to be posing a challenge to the next layer. As you rightly said, Mushir, that probably regulators are going to wait till something becomes more matured and then probably see the how exactly it's going to impact, and that's where the sandboxes come in, and they have maybe a year or 2 to 3 years to see new experimentation, how it's evolving. But from your in your view, these new areas which are into metaverse, or which are into NFT marketplaces, which are into different, entirely different concepts, which are never, that this instrument was not existing as a traditional instrument, and it was not seen. How do you see these challenges getting addressed by regulators, and how exactly in your personal opinion, what will be the top 2 or 3 things that you should be looking at if you're watching the fintech space as an opportunity?
Look, digital assets is top of the mind for everyone, right? It is something about, let's focus on digital asset. I think blockchain technology as the underpinning layer is going to be most important. Digital assets is newer evolution models for fintech as such. So we are looking at, I think, digital assets, both regulatory elements as adoption by enterprise is going to be quite important. Secondly, the banking as a service, Prasanna kind of mentioned about it, and I think that for me is one of the things that we are seeing evolve. We see the Standard Chartered do some of this work in parts of Asia, and I see that as one very interesting concept where banks are going to offer their rails for fintechs, and we will see how things can progress on that space, where fintechs will not necessarily now look for licensing, but will work with banks, because banks have kind of realized that the target markets or target audiences may be different and models may be different. So using this will be there. And number 3, which is evergreen in the fintech ecosystem as such, is use of machine learning and data analytics, right? That is going to get more enhanced, largely because there's some complexities that are coming in through regulatory controls, right, on what you can do with data. So that brings up a new challenge, but you also want to do data mining in a way that can be impactful. So with powerful quantum computing and others coming through, quantum computing as a broad retail, maybe longer frame, but you do have much better models in place in the market. So I expect these 3 to be the top 3 themes going forward.
Thank you. So, Prasanna, in your view, the same question, but from your vantage point where you are, how do you see these new trends? Do you see these are challenging in terms of regulations, and how do you see they're getting adopted into the bank? Some part of that you already answered, but what are the top 2 or 3 things that you are watching into this new space?
I think this is a new space, and banks are going into this new space. Why? Because customers are also now looking at a better expectation and better experience into this space. I think it will be combination of a centralized and decentralized always, because banks are always a centralized entities governed by governments or regulators out there. But it will bring on new types of models to provide a better services. One example I was giving is like the same customer who is onboarded once at one regulated entity. Can it use the same KYC or decentralized KYC to some other same type of same regulatory type of entity, or maybe a banking entity KYC can be reutilized at the insurance with additional some of those parameters. or providing a complete control of your KYC, which I think Mushir was talking about, paper KYC to digital KYC to some form of a sovereign identity kind of a KYC, which is in control of a customer who will decide when to use KYC, when to expire the KYC, and within KYC, various parameters also can we utilize it. So then that it's all possible with a Web3 kind of a mechanism where customer will have a larger liberty to utilize his data rather than the regulated entity. So I think a combination of front side IoTs, in mid side maybe API, smart contract, backend, big data, blockchain, AI will provide a much more needed experience, either banking with one bank or banking with a consortium of banks. So likewise, many business models will arise here onwards. I think it's a good thing that regulators in India's example, RBI Innovation Hub, is supporting some of those interbank initiatives or interbank banking applications, or insurance with IRDA also now bringing on their consortium on a blockchain side. So I think it's a good time how regulators are supporting, how banks are also internally creating those role skill set. Primarily what is happening outside of the banking, which wherein these metaverse, NFTs or DAOs are already slowly getting into the mainstream, right? The way we have seen traction in the last couple of years. NFT market share or market cap is billions. Similarly, DeFi's or metaverses. But I think it's a cautious time also to see how larger adoption will happen with a better security, better compliance, and better regulation, because we'll end up in a different types of risk while we'll have these different type of business models. So it's a opportunity as well as a responsibility of the regulators or the parties who are part of any of those services who are forwarding to the customers how data security will be taken care while we have some use cases on metaverse. It's easy to say that we have done banking in metaverse or smaller use cases, but when actual metaverse will come, the way we have actual web application being utilized on social media or any other sites today, I think Web 2 world is a quite huge world compared to the physical territory of Earth, right? Similarly, metaverse will be 3D world, and there are different new types of frauds, new types of roles will come. Metaverse designers or metaverse business analysts or metaverse cops, right? The way we have cyber cops, we have a cyber insurance. In metaverse, we'll have a cyber or other metaverse insurance. So new kind of things will come. So I think regulators are there for that purpose. But I think acceleration of innovation. So I think there will not be much delay or lag, because from start regulators are involved and much more fueled by new age tech companies. Yeah. So let's see how this will become a reality. Rather, it is already being, but a larger adoption is yet to come. I think some of those international use cases like central bank digital currency will do cross border payment kind of initiatives. So let's look at how is the future with all these emerging technologies. Yeah.
Thanks, Prasanna. I think we just overran for 10 minutes, but it was a wonderful session. And it was, I think we broke open the fintech global landscape quite nicely, and the play of regulators, which is the core aspect of it. I would have loved to cover a lot more, but in the interest of time, I think we'll need to stop here now. And thanks again for the speakers to be participating here on behalf of FIS. I'd like to invite you for the demo days that we're going to have, and all the startups. This is last session of the day. We have a closing session as well, which is going to summarize the next 2 days and a few lines from our innovation partner, and then we will start working next week with you about how we can get access to FIS APIs, how you will get help from FIS mentors to finalize your pitch decks. And on 26th, we have kickoff, and then followed by that 2 days. And then after that, for qualifying startups, we have the demo days. So it was a great day, and we will meet again at 7 to summarize and get some pointers on the operational aspects of the actual ideathon. But again, I would like to thank you, Mushir, Prasanna, and Abhishant for joining this, and looking forward to see your participation into next events. Thank you very much, and have a nice day ahead.